I think the mutual fund sitting on cash, I think is a function of one, the money that is coming in into the schemes. Second, the collection of NFOs, which has also been rising of late. Therefore, together, if you look at the amount that is held by the mutual fund as a cash level, could be a little higher than what is generally maintained. The general cash level, most of the money managers maintain anywhere between 5 to 6% on the maximum side, and the lower side they're looking for 3 to 4%. At Aditya Birla Sun Life Mutual Fund, most of our money managers remain invested, except the mandate is actually to have a balanced portfolio. Otherwise, mostly remain invested. So, keeping that in mind, the cash level what is being maintained in the portfolio would be in the range of about 3 to 5%, depending upon which schemes in which the number can vary from scheme to scheme. On average, about 3 to 5%. Because equity money generally is given. It is not given for taking cash call. That is the way historically money managers behave. Therefore, it's supposed to remain invested. And if it has to maintain the cash, better be that money be with the investors. And that's a policy in which most of the equity managers manage their portfolio constructions. Therefore, the cash flow should not be treated as something they would have taken a call basis which they are maintaining cash. The Fed cut is actually the beginning of rate cut cycle after almost about 3.5 to 4 years of hiking interest rate cycles globally. And this rate cut cycle is coming on the back of comfortable situation in inflation and marginal peak in the growth momentum in the US. But having said that, the US economy continues to do well. The pace of rate cut is not going to be as aggressive as the pace of hike in rate earlier. So keeping that in mind from India point of view, because Indian economy broadly, if you look at, we continue to remain high growth economy. Inflation is under control. And interest rates already have fallen quite substantially and continues to remain at a level which is more affordable from the borrower's point of view. And the recent erratic monsoon also needs to be watched from the point of view of its impact on inflation related to the agriculture commodities. At the same time, RBI having not increased the rate quite substantially the way US Fed did, our own belief is RBI will keep the rates on hold for at least 1 or 2 quarters, and before they start taking a call of cutting interest rates, which in our own belief is more of year 2025, we'll probably see Indian monetary authorities would start cutting rates, rather think about cutting rates in 2025, and the current year, the rest of the financial year, I think should remain more or less flat. But given the fact that the broad economy continues to do well, you will find the core sectors I think continues to perform better, or probably you will even see more strength coming in, especially sectors like capital goods sectors, the auto sectors, energy sectors, including real estate sectors, and related to allied sectors related to real estate. All of them I think should continue to show good performance. When the banking financial sectors have gone through a period of consolidation, as interest rates starts coming down, and after seeing that cycle for 1 or 2 quarters, that sector also should gain some kind of some kind of attraction purely in the base of the valuations. I think the way one should look at from broader market point of view, the buoyancy continues to remain. Therefore, we'll continue to see the reflection of that both in the broader indices. At the same time, breadth and width in the increase in the market for the small cap participations that also will continue selectively. So I think rate cut cycle environment definitely provides an opportunity for choosing funds which has got a portion of fixed income, also a part of the overall portfolio. So during these kind of occasions, hybrid funds such as Balanced Advantage Fund or even hybrid asset class, which aggressive hybrid funds, which has got a good mix of equity and fixed income, and also multi-asset allocation fund, which has got a good mix of equity, fixed income, gold, and REIT and InvIT. Such kind of instruments would be more ideal, given the fact that equity markets have been performing quite well, and at a richer level, the incremental return that could come on equity for the next 1 year would be lower than what we have seen last year. At the same time, incremental return that could come on the fixed income, given the fact that interest rate cut is likely to come next year, we'll probably see that is also benefiting fixed income portfolio as well. So it could be a good time to balance your portfolio through a balanced advantage fund and multi-asset allocation fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.